All right, here we go. Another day, another market open. Let me just tweet this out into the world. Hello, everybody. It is the 14th of November. Live market open. It's the 14th of November, and it's the 14th of November, and it's another Monday, and there's a lot of market to open. There's a lot of market to open. And so that's what we're about to do as I tweet this out into the world and get the world to be here. Jay Shawai, you haven't been here in a while. What's up? Hope you're doing well. Richard, what's up? Jason, Damien, David, hello. First like. Philip, thank you so much. Good morning, everybody. We are here. It is a beautiful, beautiful Monday morning. Bacon Bombs, what's up? I don't know how much you guys have been keeping up with the news over the weekend. Obviously, a lot of stuff has happened in the world of stocks and business in general. FTX Saga is continuing. Markets are down, early market. New Jersey woke up cold as hell. Yeah, man, it's really cold. I've got a case of the Mondays. All right, hold on. Let me just finish tweeting this. Let me get this to see people. All right. It is 15 days left until December, and we will be in December very soon. So that is exciting as well. What's up, Ismail? People need to invest in real software like Palantir, not crypto. Oh boy, we're already getting a little dicey. Okay, so let's pull up the markets right now and let's see what is going on. Obviously, things are in the crypto world a little bit scary, given what's going on. FTX has collapsed. We already know that. Apparently, the dude is running off with the money, or he's trying to get into Dubai where he can't be prosecuted. I mean, there's so much stuff going on right now. If we go to Bitcoin, and let's take a look at that, we will see that BTC is last night it was touching 15,000. All right, 16.5. So again, it hasn't been able to really collapse to like that 10,000 level that people thought it would collapse to, or like 12,000, because quite frankly, I mean, it's just, it's Bitcoin. I mean, people will buy it, right? People will buy it. So if people are going to buy it, then it's going to be hard for people to, not buy it, especially if you're a Bitcoin enthusiast. And it's trading at prices that are attractive, I guess I would say. So Bitcoin at 15,000 it went down all the way to 15.9 and then rebounded right back to 16.47. And now it's staying pretty stable right there. Cash King, thank you for being here. Alfred, Ramu, T-Bill, another week of finance. Yep. I'm about to head to the States for Thanksgiving. Not looking forward to the weather. Yeah, in New Jersey, it is incredibly cold today. I mean, I woke up and I was like, wow, this hit me today in terms of the cold. Nobody really knows what will happen, or they guess they will see the future. There are a handful of financial people who say the stocks will be bullish the rest of the year. Yeah, so I did a video today about Tom Lee. Tom Lee thinks we're going to rally to 4,400. And just imagine, the market was 47.8, okay, in the S&P. So let's do some quick math, okay? Quick math with a minute. Here we go. 47.8. So if we had 47.8 where we started the market, and we're ending the year at 440, then that means we are only going to be down 8.6%. That's 478 divided by 444 minus 1 times 100 for the year. To only be down on the S&P 8.6%. Look, that's a lot, but in comparison to what we saw, like the furthest we went down from the all-time highs, if we do 478 divided by 349, that was 36%. We were 37. We were down 37% this year, which is pretty bad. The Great Recession, we were down. This was the Great Financial Crisis, 50%. If you go to the max chart and you look right here, this is 2008. We were at 126 at the peak, and then we went down to around 49. So even lower than 50%. We bottomed out in 2009, as you can see that dip right there. So for us to be at the highs of 474. Okay, so 479. There it is. 479 at the top. This was early January. And then to go all the way down to 349 and to end the year basically not even down that much, 8%. I mean, just think of it. It's like a roller coaster of a year that the market took us on to not even end in that bad of a way. And so it's a super, super interesting. Tom Lee, obviously, his argument was surrounding around inflation. Cathie Wood, I did a video on her as well, and that'll be coming out later today. She thinks that deflation is inevitable given what's happening right now. She has some decent points, but we're gonna see. Tom Lee is always bullish. Yes, he is always bullish, but still. he's still always bullish, but I mean, he has a little bit of an argument on inflation. Amit, are you signing up for Twitter content curator? We will support you there. So I'm on Twitter, Ruckshit, at Amit is investing. I don't know what a content curator is per se. Is that a new thing on Twitter? I don't know. But I will put my Twitter in the description and I'll pin it for once because I never pin my Twitter. So if you guys aren't on Twitter, I encourage you to be on Twitter and check it out and see what Twitter looks like. Yo, my YouTube is broken. Okay, so I don't know how many people are live right now. I actually cannot see how many people on my YouTube. It says one person watching, and on my StreamYard it says 0. So if anyone could tell me how many people are there, and if you get every 5 minutes, someone just tells me how it's, I can't see it on YouTube. That's super, super interesting. Dollars sold over VIX oversold, predicting SPY leg down. Interesting, Gabe. Shows only one, says one here too. Yep, it's broke. Okay, so wow, we don't know how many people are watching. That's crazy. That's a YouTube thing. I don't think that's a me thing today. YouTube's a big platform. They obviously will have some issues on some day. But for now, all we know is that we're here together. All one of us. Tesla pre-market 1.48% down. Netflix pre-market down. So the market's down a little bit pre-market. Obviously, the market rallied incredibly last week. I mean, the last week it was the biggest gain for the Nasdaq since 2008 in a 2-day rally or 1-day rally. That was the headline, which is, you know, that's a pretty big deal given the market that we're in right now. Nasdaq, as we can see, rallied very highly up to 11,323%. Remember, we were close to touching 9,000 not too long ago. Let me go to 3 months. Yeah, so we were at 10,088 October 13th. That was the current bottom. 10,088 means that and we got close to 10,200 again. 10,088 means we were 88 points away from hitting 9,000, and we've rallied massively since then up to 11,305. S&P also not budging. S&P is doing, like, look at this. Imagine if the S&P were to hit 400. Like, imagine the psychological barriers that would create just by getting up to that 400. 42,069 people watching. That's hilarious. So yeah, it's interesting. It says one here is broken. Yeah. Now the crypto apocalypse. I mean, the Sam Bankman-Fried stuff is just unbelievably insane. He tweeted the other day, by the way, and I'll show that right after the market open. He tweeted last night. He said the words "what," and then he tweeted "H," and that hasn't been deleted. So literally, we do not know what this guy was trying to say. He said the word "what" and he said the word "H," and all of us are just like, what? Like, what are you saying, bro? Like, you are under investigation right now. Billions of dollars have gone up into smoke, and you're just saying the word "what" and "H." I mean, this is a story that is Bernie Madoff level crime to it, especially if he was taking customer funds, which is what he was doing allegedly, and giving them to the sister company Almedia, which was the trading fund inside of the exchange, which, like, that's not supposed to happen. You're not supposed to have a trading fund inside of the exchange. But if that was the case, and by the way, they were trying to raise money. He was in Dubai 2 weeks ago, or September 27th. So no, 2 weeks ago. Yeah, I was like October 15th or something, trying to raise money. And those pictures of him being in Dubai just leaked the other day. The story just gets deeper and deeper and bigger and bigger and bigger the more you break it down. Palantir down 2.97% to 816. And Bridgewater Associates, Ray Dalio's fund, has increased their Palantir position by 300%. And they have about 700,000 shares now. I can show a screenshot of that in a little bit. So that is also happening. All right, here we go. We have 10 seconds away from the market open. H for Hillary. Bell incoming. It is November 14th, close to November 15th. And then we will be in the middle of the week. 9:30 a.m. I hope everyone has a great Monday. I hope everyone takes this week on and whatever challenges that come with this week. The stock market in the United States of America is officially open. Wake your ass up. Let's see what's going on with the stock market. We got Roku at $60, Netflix $289, Tesla $193. I DCA'd a little bit at $184, so Tesla's up from that DCA. Roblox at $36.30. Roblox's earnings weren't that bad, but the market didn't like it. Robinhood, Sam Bankman-Fried owns about $450 million Robinhood, and apparently he was trying to sell his shares for a 20% discount over a text messaging app, which got leaked as well. I mean, this story is just absolutely insane. Robinhood at 1020. I have a video coming out today on what I think Robinhood needs to do to transform itself into be one of the best financial apps on the planet. So look forward to that. That is coming out as well. Alibaba at $73, Neo at $12, DNA, Ginkgo Bioworks $2.8, Spotify $83, rallying from the lows of about $69. Apple $149, Microsoft $240, Google $95, rallying up from the lows of $88. Snapchat $11.56. Wow, Snapchat's past $10. Okay, so Snapchat's rallying up from the bottoms of $7. Meta Platforms $112. So it's down today, but obviously still up from the lows of 88, up about 27%. Airbnb 108. Airbnb earnings also weren't the best, but nonetheless they got through it. SoFi $5.97. SoFi has been doing a pretty good job staying above $5. If we go below $5, there is that reverse split concern. So SoFi's done a really good job doing there. Open Door rallying above $1 as well, or $1.80. That's where it was stuck. Coinbase $54.89 and Zoom $87.47 as well. Let's see what we got in the comments. Man, I knew I should have bought Hood at $7. I knew I should have bought Hood and Snapchat at $7. But, you know, it's always hindsight 2020 because you're like, wait a second. A Hood, I also thought I should have bought at $7 because I felt like it was cheap. But I put in the video today why I will not buy Robinhood until they do this one thing. And if they do this one thing, then I'm on board with actually owning the product for a long time. All right, let's go into the talking heads. Let's see what they are speaking about. Obviously, the financial markets are just insane, given everything that has happened over the past couple days, really. But let's look at some bullish news. All right, inflation will come down hard next year. Let's see what the reasoning is for this. Let me know if you guys can't hear the audio. You should be able to, but let me know if you can't.
Street getting a note, a Wall Street note of sorts, getting some attention this morning that a lot of folks are going to pay attention to. Goldman Sachs' economic team, led by Jan Hatzius, who we know, says that inflation will drop significantly next year. Now, Goldman cites three reasons: supply constraints easing, cost of housing falling, and the labor market cooling. Goldman says if this happens, the Fed may be able to be less aggressive in its interest rate hiking cycle. Joining us right now to talk about is Linda Dussel. She's the senior equity strategist at Federated, and JJ Kinahan, IG North America CEO. Good morning to you. What do you think? You think it's over? It's over?
I don't think you should be saying ding dong, the witch is dead by any stretch of the imagination, Andrew. You know, again, as Joe just got done saying, he had one data point last week. I think that there has been a lot of people who are looking for a reason to buy, waiting for some good news. And let's face it, that move last Thursday was unlike anything we've seen in a long, long time. It was amazing that we just kind of kept going. But that all said, I think the inflationary pressure continues for the next 6 months. I do think their point, however, on housing is a really good one, because the rate move up happened so exponentially. I don't think housing prices have had an opportunity to catch back up. And as we start to see the housing selling season now slowing going into the holidays, when we pick up next spring, I do think you're going to see significantly lower prices overall, and that will help with some of the inflationary pressure.
Linda?
Yeah, well, I agree with much of what JJ said. Inflation is going to come down hard next year. Inflation has about a 1-year lag with the monetary, the money supply out there. M2 is crashing down hard. So definitely we'll see inflation come down hard. The question that we all have to wonder now as we look into next year is what's going to happen with earnings. So right now you're 17 times forward earnings. Are the forward earnings too high? Because all of this tightening is going to work with the lag. 2023 will be a very, very interesting year that way. And that's what I think we have to focus on is earnings next year. And that's a little bit harder than is inflation coming down.
Linda, when it appeared that the Republicans were going to be, having a red wave, we talked, or I didn't, but others talked about how the stock market was going up, 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 up because there's a red wave. Now you saw what happened over the weekend and where we really are. I don't think the markets are trading off that much as a result of that. What do you think the politics mean?
Yeah, and it's interesting that the markets aren't trading off that much from cryptocurrencies blow up last week either. That's a very powerful comment. I think that the market, as history says, just likes gridlock. And this looks like it's going to be gridlock to the extent the Republicans win the House. That's okay. My own personal hope is that this all gets a lot more boring. I think it would be cool if we made our way into the next 2 years thinking, let's make politics boring again. Wouldn't that be lovely if we did that? We could get back to fundamentals and we wouldn't have these outside moves either way on betting what politicians are going to do.
Yeah, and I mean that was the reason we wanted the Republicans, or the financial industry wanted the Republicans to win, because if the Republicans control the House, even if the Dems control the Senate, which by the way they now control the Senate, they would there's going to be gridlock and politics will be boring, which means nothing can pass that that's bad for the markets. Okay, couple of Twitter updates. So here we go. Palantir. Chris Jones, definitely follow this guy on Twitter. Does a really good job tracking the shares and the share counts. Goldman Sachs added 496,000 shares from Palantir's Q3 13F. Financial Architects added 200,000 shares. HSBC added 158,000 shares. And Fourth Swedish Pension decreased 537,000 shares. And that is the Q3 ownership that we see right here. Now, if we go to the daily Palantir account, we have where is it? Here we go. Bridgewater Associates LP, again, the Ray Dalio fund, reported a 349% increase in ownership of Palantir Technologies. This was disclosed a couple of days ago on November 10th, showing they had bought more shares. Now, what does this mean? Is this bullish? Yes. Does this mean does this mean the stock is going to rally or something? Probably not. It does mean that institutions did load up when it was low. I mean, and a significant amount of them. And obviously the reason for this is because if they had a long-term position, if nothing broke the thesis and you're a financial institution with billions of dollars, you increase your position. I mean, that is the way you make money in the market long-term, and you make significant amounts of money. If Palantir dropped to $7, $6, and you had it at 10, 15, you'd buy the dip. It's just that simple, even in this market, especially if the thesis is not broken. And from what we saw from earnings and FoundryCon and everything going on, the thesis is just absolutely not broken. In my opinion. Mic or audio bad? Very bad. Really? The mic's that bad? The mic is that bad? Damn. Okay, let me just unplug it real quick, guys, and I'm gonna plug it again. Let's see if that helps. Okay. Testing. I don't know if that helped. Let's see if that helped. I don't know why it was being crappy here, but okay, we'll see. It cackles sometimes, very staticky. Damn, why is that happening, bro? I fixed it this weekend for OBS. So on the videos you'll see today, there's no cackling. I don't know why it's doing that for StreamYard. All right, well, I'm sorry about that. I'll try to fix that even more, and we'll keep it going. But that was the Palantir news. And then let's go to Sam Bankman-Fried, right? So this is his Twitter, SBF. He did not delete this. Look at this. What H? Again, this guy is under major investigation right now. What's going on is absolutely insane. And he has said, what? And then he has said H. And it's and then look, just random in Google Translate. What? I def snatched them. This is insane. This is insane. Audio is 100% for me. Good for the last minutes. It's back. I don't know, Chris. New to the channel. Thank you for the info. Hendrix, thank you so much. How did you discover the channel? Please put in the chat. Always curious how people discover the channel. Would love to know. Also, you guys said get a better cable. These are the official cables. So, I don't know if these cables are ruined now, but these are the official cables. All right, let's go back into the markets and let's see what's going on here. Tattooed Chef, $3.74. That is a stock that is down pretty big, still down. S&P, so even if certain stocks are taking a shit or getting hit, the S&P is not taking a hit. The index is just not falling. It's just not letting itself fall. Tesla going down to about 189, down about 3%. Robinhood 2%. ARK Innovation down 1.7%. And Roku down 2%. Let's actually talk about Cathie Wood, okay? So I did a whole video on this, but regardless of that video, I want to bring up what Cathie Wood's been saying, because if you didn't see how she's talking about the Roaring Twenties, it's a really interesting sort of analogy that Cathie's talking about where she's going. Okay, you guys say Crackle is back. Why is the crackle so bad? I'm gonna put it on my phone real quick. I just want to hear what it sounds like. Why is the crackle? Yo, on my phone it sounds perfect. There's no crackle. So I guess it comes in like little bits and pieces. And he says what? And then he said H. You see on my phone that sounds perfect? Yes, I hear a crackle. Damn, that's so weird. There's a little bit crackles. Is that the business frat shirt? Yes, this is my business frat shirt. Okay, let's get into Cathie. I'm sorry for the cackle, guys. I hope it goes away. Let me know in the next like 30 seconds if it's still there, if you guys still hear it, because on my phone, I literally don't hear it. I believe you guys that you hear it, though. It probably comes and goes. Okay, here we go. It comes and goes. Okay, so that's the issue. We got to figure that out. If inflation is unwinding as we believe, then we could be heading back to the future, the roaring 20s, the last time several general purpose technologies evolved at the same time: telephone, electricity, and the internal combustion engine. So a couple of things here. First thing I'm going to say before I get into any economic analysis, I asked a girl out in February 2020, and I used the roaring 20s because we entered 2020 as the punchline for getting her to go out with me. And she said yes. So I will always love the concept of the roaring 20s. Second of all, in the roaring 20s in 1920, we had a couple of key technologies that all intertwined at the same time. We had the telephone, which is obviously very important for communications. This is where you get the AT&Ts, the Verizons of the world, all these different things. You have electricity, which is obviously really important because you can't do any of this shit without turning on the lights. And then you have the internal combustion engine, which is key for mobility and transportation. So when she says the setup is remarkably similar here, that's really interesting to me because obviously, Cathie would, if you know anything about ARC, blockchains, AI, robotics, genomics, all of these things are intersecting and intertwining at once, which is why Cathie has bet on the companies that she has bet on, because she believes all of these things at the intersection will give far better returns. In fact, she said 40% CAGR for until 2026, which is kind of crazy, than Amazon, Apple, Microsoft, and Google. Those companies are not the new technologies that Cathie Wood has identified. Now, is the stock she's picking embodying those new technologies? I don't know. That's debatable. But the new technologies coming together, her argument is what's going to make this decade amazing. And I think a lot of investors have bought into that. I mean, she's raised, I think, 30-40 billion dollars that she manages, right? So like she's convinced people of this message and people have bought into the story. Now, listen to this. She says, prior to the roaring 20s, the world was at war, World War I, and suffering a pandemic, Spanish flu. While both had a more serious impact on that global economy, today's combination is a strong echo that could result in a much lower than expected inflation and boom in innovation. During World War I and the Spanish flu, supply chain and other shocks pushed inflation to 20%. That was happening at 20%. At its worst in June in 1920, inflation peaked at 24%, but then dropped precipitously in 1 year to negative 15%. And that right there is what I think Cathie thinks is going to happen. You go from 24% inflation down to negative 15% deflation. She says we would not be surprised to see a broad-based inflation turn negative in 2023. Now, is that going to happen? I think in general, that thesis is a little tough to believe in just because there are so many different things going on in today's economy that are different. I mean, just the nature of the economy that we have is so much different than it was 100 years ago in 1920. But like the setup is what she's saying is pretty simple, and she's going to use some Fed's funds rates analyses, not like actual market analyses or like technology analyses to make sense of this. So she said the Fed raised interest rates less than twofold from 4.6 to 7% in 1919, 1920, and then eventually up to 24%. Faced with much lower inflation this time around, the Fed has increased interest rates 16-fold. So that's an 8-fold increase on the pace of raising interest rates, even though we have lower inflation than what we had back then before it ballooned to 24%. So she said, even though and one of the things that goes against her argument is that the Fed raising interest rates as low as they did, or at a pace of as slow as they did, probably could have led to 24%. Right. So like there's a part of her argument where it's like, oh, we barely raised it last time. It's like, yeah, but then we had 24% inflation. So maybe us raising it 8 times harder right now and seeing inflation go down is actually a good thing. But her argument is that is a contrarian perspective for that to happen. So if inflation drops below the Fed's 2% target and economic activity disappoints, then interest rates are likely to surprise on the low side of expectations next year, ushering in this century's rendition of the roaring 20s. And ultimately, that's the argument that she's saying. Cathie compares cars and electricity to crypto. Well, I mean, her argument is that these are different technologies. Blockchain is different. Deflation is not impossible. Stagflation is very possible. I think deflation is possible if inflation goes down. Here's how deflation is possible. It's actually simple. The Fed keeps staying hawkish and inflation keeps going down. Simple. if the Fed keeps being hawkish in the face of like massive decreases of inflation, we are going to have some deflation, because you cannot have that tight of a Fed funds rate and try to stimulate the economy, with interest rates at 4.3, 4.7%, and inflation being close to like 2-3%. Like, that's just not possible. You're going to have to drop it really quickly. So that's how it happens. The question is if inflation decreases that much. And I don't know if that's going to happen. 7.7 is still not amazing. She says, as inflation dropped to negative 15% in June 19, 2021, the Fed lowered interest rates from 7% to 4%, tripping the switch for the roaring 20s. From August 1921 to September 1929, the Dow Jones Industrial Average compounded an annual rate of return of 25%. The last time we saw a 25% year, it was about 28% from 2020 to 2021, when the S&P rallied to 478 towards the end of the year. 30% in 1 year on the S&P it doesn't happen often, right? So in the 20s, that is the roaring 20s for 8 years in a row, every single year, because there was so much technology, there was so much growth, there was so much innovation, there were so many companies, there were so many jobs. 25% year after year. Does that happen in this generation's 2020s? If it does, this is the greatest time to be alive. Greatest time to be alive. If it doesn't, well, it kind of sucks. It would kind of sucks. DNA earnings today. Okay, awesome. Great. I will be covering DNA earnings, I'm assuming after the bell. Roaring 20s, lots of, well, lots of, yeah, that could also happen as well. Elon tweeted he's sleeping at Twitter HQ. He wasn't lying when he said he was turning it into a homeless. Elon is getting that done. Amit started Rocket Labs Weekly with Matt and Chris. I don't know anything about Rocket Labs. I should know more about it, but I don't. If I learn more about it, I would love to start a Rocket Labs Weekly. I just have to actually learn a little bit more about it. So The Verge tweeted an article about Elon Musk in Twitter, and I want to show you guys that real quick, because the article was actually very interesting around what Elon Musk has been doing. Here we go. Hold on. Let's do this. Twitter. Where is it? Elon Musk, Verge first meeting. They got a transcript of his first meeting, and inside of that transcript, basically they show what he said. Yes. Okay, here it is. This came out over the weekend. I don't know anything either, but I'm intrigued. Nubank and DNA earnings today. Wow, DNA is down 5% and Palantir is down 5%. All right. So the market's taking a little bit of a crap. So Elon Musk spoke about a bunch of things at this meeting that The Verge got. Okay, so here's one of his ideas. I think this is quoting him. I think there's this transformative opportunity in payments, and payments really are just the exchange of information. From an information standpoint, not a huge difference between, say, just sending a DM and sending a payment. They're basically the same thing. In principle, you can use a DM stack for payments. And so that's definitely a direction we're going to go in, enabling people to go on Twitter and be able to send money anywhere in the world instantly and in real time. That's a great argument for what you can do with Twitter. Now, the execution of being able to implement a payment system within Twitter might be a little bit difficult, but that is why Elon's there. He's there to change some things. Then he talks about you can attach a debit card and you could have the infrastructure to be able to do that. He also talks about what would declare bankruptcy. We just definitely need to bring in more cash than we spend. If we don't do that, then there's a massive negative cash flow. Then bankruptcy is not out of the question. That is a priority. We can't scale to 1 billion users and take massive losses along the way. That's not feasible. I don't think we will. Okay. And then he says Twitter's potential as a TikTok-like platform for short-form video. So this is a really interesting part. This is combating YouTube a little bit as well. He says, right now, content creators cannot post the length of the video that they would like to post, and they cannot monetize it, which means they cannot pay the bills. They're not like super complicated things. They're pretty basic. We're not trying to put YouTube out of business, but I'm just saying, do we really need to give YouTube a whole bunch of free traffic? That's a really interesting point, right? Like, imagine your Twitter and every other tweet. Like, if you go on Twitter right now and just type in YouTube and you just press search by latest, there's going to be millions of YouTube links because there's so many people watching YouTube and they're tweeting out their YouTube videos. What if they were just posting those Twitter videos? I mean, you're not going to get rid of YouTube, but you're at least not going to give YouTube this unlimited stream of free traffic that it's just like going to keep getting forever and forever and forever. He says, I was actually flipping through the Twitter video where once you go into full screen video mode, you just keep flipping through videos. It's like a TikTok video type of mode that they've created. He says, it's actually not bad. I was like, okay, well, it's pretty good. I think building on that makes a ton of sense. How do we start the creator flywheel if we don't have video ads to begin with? This is where subscriptions come in because YouTube has premium. So I think this is a case where it makes a lot of sense to spend money and at least match slightly better than creators on YouTube are saying. And for now, we'll just pay the money that is reasonably competitive, maybe slightly better than YouTube. Now, paying people money, which by the way, I'm coming out with a video today about how much money I made on YouTube throughout 2022. I know I keep saying I'm coming out with a video today. I'm trying to step out the video output to about 4 to 5 videos a day and really stay consistent on that. So hopefully that'll be good, and there'll be a lot of diversity on the channel. But YouTube pays creators decently well. I mean, to give them 55% of the ad revenue, first of all, you have to have the ad inventory. Second of all, the ads have to make sense. They have to work. They have to target the audiences. And third, you've got to get a significant amount of views. Like if Twitter was to do like a 60-40 split or a 70-30 split, that would be great. But you've got to have the infrastructure where advertisers are willing to pay for that system. And there's like a bidding. I mean, Google Ads is not complicated, but it's been refined over 20 years. Twitter, to build that out for a video system, it's not the easiest thing to do. So we're going to have to see for them to be able to do. Hope it was a lot. I mean, it was as if I worked a minimum wage. So a lot is relative, but imagine me working minimum wage. So that's what, $13.15 an hour. And so it's just the question of how many hours I worked, and that's how much it came up to. It's awesome for it to be on the side, right? It's great. Like I love it. And I personally want to 10x it. Like I really think there's no reason this channel can't be doing 20, 30 grand a month. Like that can happen. That is 1000% possible. I just got to figure out how, like, okay, so there's two niches of this, right? As we're talking about this, there's either you go the Meet Kevin route, which is a ton of videos, jam-packed a lot of information. He just has the energy to make all those videos. I don't think a lot of the videos are BS. Like the videos average from 10 to 20 minutes each, and there's a crap ton of information. Like he's not just sitting and talking for no reason. Or you go the like Ticker Symbol U route, right? Where Ticker Symbol U does 2 videos a week. It's like this video essay. There's a ton of editing, all this stuff. Meet Kevin doesn't edit. He just like talks to the camera. I would love to know what you guys think in the chat. I personally do not think I am a Ticker Symbol U type of video creator. I'm a Meet Kevin type of creator because I can just talk to the camera and I enjoy that a lot. And I think I can talk to the camera a bunch of times throughout the day with a lot of information. So that's the type of creator I think I want to be in terms of quality of output and quantity. It's just a question of if I can put out that much stuff. And so we're going to see over the next couple of weeks. I'm going to experiment to see if we can actually get there. I did that at one point in January with Palantir, but that was hyper focused on Palantir. So I want to see now if I can diversify from that. And so we will see. We will see on the channel as well. Stock market's pretty boring. Nothing's going down. We're at -2%, -5%. Square had a phenomenal earnings, by the way. They look at Square right here on the 3 months. That was a massive rally up, down at $58, up to 72. Let's do some quick math. If we take 72 divided by 58, that's a 24% gain. -1 times 100. 24% gain in like a day, which is not bad at all. SoFi down a little bit as well. Lilium is a Palantir SPAC, 178. Wejo is also a Palantir SPAC, and that is down below $1 as well currently. So nothing too crazy going on in the market. What's your biggest position of it? It is Palantir. DRK, thank you for being here. I think the Meet Kevin is 100% chance to you. I agree as well. Let's get this channel going. Hit the like button. I appreciate you, John. Means the absolute world to me. Do you need to hire a video editor or videographer? I have a video editor full-time for my startup, Audia.io. If you guys haven't signed up yet, please sign up. Link in the description. I have a video editor full-time already, so he works with me all the day. If you didn't have a startup, you could totally do some Meet 7. So you see, I think I could do both, Nate. I think there's a world I could do both because making videos doesn't take that much time because there's not a lot of editing. It's just the research part. So if I can figure out how to streamline that, then I think there's a way we could do both. And I think they both help each other. Quick maths. Yes, quick maths. If you want to have more virality, you got to have goofy cat saying like Tesla my Esla and things like that. Your style plus a slightly viral catchphrase will get people talking. Yeah, I mean, look, we have some insiders on the channel. We have the cowbell. We have different things that I do. Ginger ale, Rizzy knows. So little different things that we do. But yeah, I agree. Having those insiders are so important to growing a fan base. All right, let's get back into the talking heads. No, you can definitely do both. I meant like the 7 to 8 videos he was doing a day. Yeah, and that's because he had the freaking COVID thing, bro. Like, I don't think people remember. I've said this many times, but I want to say it again. There are keywords on this platform that can turn you into a millionaire. And for me, my keyword was Palantir. It didn't turn me into a millionaire, but it allowed me to at least get discovered for an audience. And when you have a certain keyword that you can make content around, you can get and penetrate into people's feeds. And if you're not in the feed, you're not discoverable. So you have to get into the feed. So Meet Kevin was a pretty relatively small YouTuber until COVID happened. And he decided to become the journalist for COVID, at least in the finance space. And the 7 videos a day on that one keyword exposed them to hundreds of thousands of people. It was the smartest thing he could have ever done, to be honest. And so that was really big for him. And so I don't have the keyword, like a COVID keyword, which is just so much traffic's behind that keyword. So I've got to do it in a different way, more organically. And so it's a lot harder, but that's the thrill and the fun of trying to actually build an audience and build a fan base. Okay, let's see what we've got here coming up. All right, here we go. Let's listen to trading and FTX accounts and some more updates on what was going on. Is SoFi less than 5%? Yeah, SoFi is less than 5% of my portfolio. SoFi is not that high.
Fast moving, so fast in the development, fast moving developments with crypto and FTX last week boggles the mind. If you blinked, you missed it, or some of it, Kate. And Kate Rooney joins us now with the latest. Good morning.
Hey, Joe, that's right. We have some new reporting with our CNBC investigative team on how FTX unraveled. According to a source familiar with company operations, the quant trading firm founded by Sam Bankman-Fried, Alameda, was using customer funds from Bankman-Fried's crypto exchange, FTX, in a way that flew under the radar of investors, employees, and auditors. We spoke to sources who say FTX and Alameda kept these assets off of its balance sheet, and FTX drastically underestimated the amount it needed to keep on hand if customers eventually wanted to cash out. Part of the issue was the way the exchange accounted for margin trades. According to the source, it allowed clients to borrow crypto from one another, and it wasn't properly tracking the value of those cryptocurrencies. Alameda was also trading on margin and using a cryptocurrency created by the FTX exchange called FTT as collateral. We also spoke to current and former employees who say it was a small inner circle that knew about this alleged mishandling of funds, and Bankman-Fried declined to comment on that, but he did tell CNBC a margin position took a huge hit, as he put it. A lot of other news over the weekend around FTX, Joe, as you mentioned, moving pretty quickly. Some users appear to have found a way to move money off of the exchange through a backdoor in the Bahamas. Data from Argus telling me they found unusual trading patterns when it comes to NFTs. Some digital collectibles that traded for around $9 just a few weeks ago were selling for $10 million last week on FTX. Argus says the pattern suggests desperate customers were looking to users in Bahamas, since it was the only jurisdiction at the time allowing customers to cash out. Bahamas police now say they're investigating FTX and whether any criminal misconduct occurred. FTX also suffering a suspected hack. Over the weekend, FTX's new CEO and restructuring officer says it's in the process of moving customer assets offline. As a result, data from Elliptic puts the potential damage at around $477 million. Joe, back to you.
And that was crazy. The big thing was them getting hacked over the weekend. And that led to massive levels of money being taken away. Now, this comment right here, this is what I want to look at. Ty Gorton says FTX was such a blatant government-backed honeypot. The crazy sports and celebrity involvement is a massive red herring. Now, okay, so here's what I want to know everyone's question on, or everyone's thoughts on. This is what Elon Musk just responded to on Twitter around the FTX thing. Okay, so look, Tara Bull tweets, was FTX being used to launder money for the Democratic Party? WEF sponsored FTX on their website, which now has been removed. The World Economic Forum. Now, there's a lot of things about the World Economic Forum. We don't even have to go into it, but FTX was sponsoring everything. Sam Bankman-Fried gave $1 billion. He was the second biggest political donor to the Democrats outside of George Soros. But that's not my question. My question is Elon Musk saying a question worth asking. So this is the thing that I want to ask to everyone in the chat. These comments, I believe, are what make advertisers not want to be on Twitter. If this is a conspiracy theory, if this is not a conspiracy, who knows, right? The point is, it's like super, super controversial, and Elon Musk is giving it front and center attention because he's responding to it. I don't know if it's good, I don't know if it's bad, but when he says stuff like this, I think that's what make advertisers feel, hey, you're kind of like spreading some stuff that we don't even know is true. We don't know if it's false. We don't know if it's misinformation. We don't want to be a part of these conspiracy theories. We don't want that content to be associated with their ads. So we're not going to advertise on the platform. Now, granted, Elon is Elon because he tweets this type of stuff, right? And if he pulls off the subscription play, he doesn't need to worry about whatever advertisers say. But this is something I think is what advertisers are concerned about when you keep responding to all of these things about Democrats and conspiracy. At the end of the day, it's political. Forget if it's right or wrong. It's political, and advertisers hate having to take a side when it comes to politics. And so that's the hard part. It's a good question to ask. Why are we afraid to ask it? It's not about being afraid to ask it. By the way, the chat finally showed up. There's 248 people. Thank you all, 248 people, for being here. It's not about being afraid to ask it. It's about the relationship with advertisers. That's it. It has nothing to do with if it's good or not to ask. I think it's a great question to ask personally, because like the dude gave a ton of money to the Democrats, and it's like, why are the Democrats taking all this money from this guy? Like, did they not think it was shady at all? Right? We want to blame influencers for getting sponsored by FTX. What about Democrats who are basically sponsored by FTX? But when you ask that question, how does it affect advertisers? That's the question. Only when it's woke that they're okay with it. Sure, that could be the case, Blake. But at the end of the day, if the advertisers leave, there's no money. So I think that's a question to think about, right? And so, having talked about CNBC, let's listen to Joe Lonsdale, who went on CNBC today, Palantir co-founder, speak a little bit about crypto. I think he talked a little bit about Twitter, but let's see what he says about FTX as well. All right, here we go.
First of all, did FTX approach you for money ever?
Not directly, through lots of friends like, Joe, you have to get into this. This is amazing. I can hook you up. And, sorry, we're not doing that.
And is your view that that crypto is therefore dead? Is this that just FTX is dead? How do you separate the two?
I think Web3 is having a very tough year because a lot of the money in Web3 was tied to Ponzi schemes. And a lot of what Web3 was doing was not economic. It was not solving important processes that matter for the economy. And this is going to really hurt crypto. Crypto's not dead, but crypto's going to be a lot smaller than it was in terms of
But so would you look at this and say Bitcoin it's at $16,000 right now. Do you think Bitcoin is a real technology that has a long-term, very viable, big future? Do you look at Ethereum similarly? How do you sort of differentiate the sort of value proposition of those types of coins, Solana and the like, versus the companies that have been either operating as exchanges or some of these other platforms?
I think the ability to decentralize who controls stores of value and for things not to all be controlled by big governments, especially when you have governments like China, Iran, Russia in the world, it's a very important thing for humanity. And long term, we're going to have something like crypto as part of our global financial system. I think that the vast majority of the money going into it through places like FTX was chasing Ponzi schemes, and these things are just massively overvalued.
What did you see when people would approach you about saying, hey, I can get you in on this? What did you see that you were like, no way?
Well, the question we always ask, I've had so many smart young people come in like, oh, we're working on crypto, we're working on this stuff. Okay, what problem are you solving that matters for a process in the economy? How does this change healthcare, logistics? How is it actually going to change what people are doing with fintech and finance to add value as a process? And there's very little of that. It was much more about the excitement. It's much more about who else was in. It felt very much like 2000, like any other bubble in that sense.
So what do you think happens here on out? So do you look at Binance? Do you say to yourself, that seems like a stable company? Is that something that you think is the next domino to fall? Coinbase is a publicly traded company here in the United States, much more regulated. Do you look at that and say, that's safe? It's not safe? I look at, how does it,
Coinbase is a well-run company. Binance seems to be a well-run company, but I'm not on the inside and it's not regulated. So I have no idea. I think in general, crypto is probably going to be an important thing over the next 10 or 20 years. I just think that just too much money has gone towards it. I'm really happy there's going to be less money going towards Web3 and more going to solving real problems. That's what's going to happen in the next couple of years.
Web3 has definitely had a hard year. Web3, for those that don't know, are the technologies that use decentralized currencies. I've never been a proponent of the Web3 social aspect. And in fact, even Elon Musk from Twitter, he said, damn, I got to show you guys this thing. This is the last thing I'll show you guys. He said that he was never considering the blockchain to Twitter. So you know how people thought, okay, Elon's buying Twitter, he's going to decentralize it, and he's going to make it all on the blockchain, which means every time you send a tweet, it's going to be on this public ledger, and people are going to be able to see it, and all this, frankly, I think BS, because it doesn't really make any sense. DeFi has potential, but so decentralizing social platforms that are centralized by nature didn't make any sense. So these are leaked text from Michael Grimes to Elon. He says SBF wants 1 to 5 billion. He's serious about partnering with you. He said he could do 5 billion if everything Vision locks. Would love to do engineering for social media blockchain integration. Founded FTX crypto exchange. Believes in your mission. Major Dem donor. So thought it would be potentially worth an hour tomorrow at the Orlando meeting. And then Elon says blockchain Twitter is impossible, as the bandwidth and latency requirements cannot be supported by a peer-to-peer network unless those peers are absolutely gigantic, thus defeating the purpose of a decentralized network. That 5 sentences is something that like the Web3 social fanatics just don't understand. You cannot decentralize and have a peer-to-peer network and have a distributed model where people are uploading content unless the peers are gigantic, because there's so much damn content and you need so much damn storage, which is why Twitter uses Google Cloud, because they need a cloud infrastructure to support the 6,000 tweets that are tweeted per second. So Elon Musk shut that down immediately. He met with SBF and realized that guy was kind of not the right guy. I mean, he said on Twitter Spaces, he talked to him for 30 minutes, thought he was pretty weird, didn't know how he got $3 billion. And as a result of that, he decided not to work with him. So Web3 has been having a pretty bad year because all the use cases for decentralizing and creating your own tokens don't make any sense. So we'll see. Maybe in the future it does make sense, but as of now, it's not really making any sense. Major Dem donor. Anyone else getting corruption? Yeah, that was a little bit weird as well. That was a little bit weird. All right, that's it for today. We've got 4 videos coming out today. Thank you, everybody. 250 people for being here means the absolute world. We're averaging 250 in the morning. This community is growing, and I really think we can 10x this freaking channel, man. I really have high hopes for this, and I think we're going to put in the infrastructure to do so. We have a video coming out today around Robinhood, what I think Robinhood needs to do to become a better company. Second, how much money I made off of YouTube in 2022. Third, Cathie Wood versus Puru Saxena, both one retired hedge fund manager, now one ETF manager, and what they believe about the economy. And then fourth, analyzing Tom Lee's thoughts and why he thinks the market can get to 4,400. Thank you, everybody, so much. It means the absolute world to me. Let's kill this freaking week. It's another Monday, another week, another chance to live and be on this planet and do something meaningful with our lives, because one day we won't be alive. So we've got a limited amount of time, and let's see what we can do. Thank you, everybody, so much. It means the world. Follow Twitter. It's in the description, or it's on the pinned link in the chat. Thank you, everybody. I'll see you on the next one. Bye-bye.